The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
Yes, it does. Anyway, we're starting off the day, at least today. Where's my, oh, crap. You got to always like it when you get that not responding. Oh, there it goes. Something else happened. Let's get back to this. There we go. I clicked something. For some reason, it decided to kind of wander away. 2086 on the S&P cash as we start the show today. 2.49 billion shares. So that 2.5 billion shares. Pretty good volume. Got to say, for just being down 4 points or being up 4 points would really hide a huge amount of volume going on in this market. We talked about this maybe even starting 2 months ago, and that is the rise and the return of the high-frequency trader in these markets. When you don't see much actual index movements, but you see massive amounts of volume, you've got to figure out, is that volume in individual stocks? And you add it up at the end of the day, and it's not. And you see that they are basically shoving these markets around and trading the ETFs, especially the indexes, and that's where a great deal of the volume's coming. It's not coming from the individual shares that underlie that for the great amount of the time. But we will persevere anyway. Time to get this party started.
That it's all just a little bit of history repeating.
And on this day in 1969, the ancestor of the internet is born. The first communication between computers at separate sites occurs over the ARPANET when Charlie Klein, working at UCLA, logs into a computer system at Stanford Research Institute at 10:30 p.m. And not long after that, long after that, but not long after that, they'd hooked this thing up to a Coke machine, and they could figure out exactly when the Coke machine needed refilling. And kind of the first thing that fell out of the internet was the Internet of Things, actually. And I visited that Coke machine before at Stanford. I thought it was kind of interesting. But one thing that is great, and that is there's a few things our government does incredibly well. A lot of things, about 98% of them rather poorly. But one thing that we did start was the whole DARPA thing, which is mostly the military giving small amounts of money to scientists and researchers to try to develop new technologies. Of course, this is probably one of the biggest shining examples. And, you always see those things where they talk about all the things that fell out of us going to the moon and all the technologies that fall out. This is kind of a similar thing. And, who would think that about $5 million, I think through about 1976, took the ARPANET through, and in the next 20 years, probably ended up being trillions of dollars in revenue from various companies, all the people that it employed. There's always the idea that probably picking a shovel-ready job is the idea to get economies moving. The experience says that's not true. Experience says developing new technologies, new businesses that can supplant old businesses and, of course, come up with things that never existed, like the internet, are really the keys to making an economy hum. On this day in 1969, and guess what? No Al Gore anywhere close on that day. After the bell tonight, we've got Baidu. We've got Boston Beer, Mr. Sam himself. Cereal malt beverages. Yum, yum, yum. Boston Properties, Chenier, Cray Incorporated. Oh, Mr. Cray himself. Great computers. Deckers, Expedia, which I'm going to figure out. I was short this, decided not to hold it through earnings, but I'm going to really be interested to see how this thing reacts to the new strong dollar. Of course, the dollar, of course, lately has been over there at Gold's Gym, pumping iron. It has. LinkedIn, of course, this thing's been beaten every earnings for what, the last 3 quarters or so. Maxwell Technologies, New Skin Enterprises, Outerwall, the company that has makes all those little kiosks for Redbox, also does the Count Coiners. Got slammed very hard last time. Another one I was short, didn't see enough signal to hold on through the last show. But to me, this looks like Hollywood is continuing to make more and more stinkers that people are not willing to rent. And of course, streaming hasn't helped their business any either. But at the same time, there's a class of people that don't have streaming or live in the country. And you think Outerwall will at least do well with those folks. But it's got to be worth driving up there and getting it and taking it back maybe the next day. And if you just have this many stinkers in Hollywood, it just doesn't matter. Solar City Corporation, Solar Winds, which has nothing to do with either solar or wind. Starbucks, of course, everybody wants to buy a $150 cup of coffee. Ugh. You know, it's about once a month, maybe once every 2 months, I can figure it out. But man, that's a pretty good, maybe probably a 24-year-old scotch or some coffee. I think 24 for $5 or $10, whatever it is. I think I'd go for the 24-year-old scotch, even if it was just 2 fingers worth. Tessero, TSRO, Trimble Navigation after the bell, and that's what will be going on. Anyway, you can give me a call at 877-927-6648. You can email me. We already have them piling up here in the path@tfnn.com mailbox. We'll go through earnings from last night, and then we'll, if we have time, we'll look for what's going on in these. LinkedIn is kind of one of the more interesting ones. Is there anything there? We've seen Facebook. I always thought LinkedIn had a better model than Facebook long term, and maybe this is a tortoise in the hare thing. But that and Expedia with the dollar, going to be very interesting earnings after the bell yet again tonight. Now, last night, we're going to go through all of them, but we had a LifeLock around about 40%, 42% here when I checked it just before the show to pop this up. But if you go to the NASDAQ, in fact, all you have to do is say Google, NASDAQ short interest and the ticker symbol, and Google will take you right to the NASDAQ page that has the latest volume and, of course, the short interest and the days to cover. The days to cover is probably the most important thing if you're short one of these stocks. And guess what? On the average volume for the last 30 days, it would have taken almost 15 days to cover the short interest in LifeLock. Seems to me like you probably stayed to that party far too long. If you are shorting anything out here, just make sure that, you got 2, 3, 4 days to cover. 10 days to cover, you're in real trouble. 15 days to cover, you might as well have a loaded gun next to the side of your head and be rapidly pulling the trigger just in case it didn't work the first time. But just a word of wisdom. Does Facebook and Amazon topped out? There's close to it. We'll talk about that too. Anyway, that's kind of it for the news of today. I wanted to get to earnings out here fairly quickly because I think it's going to take a long time to get through them. And I may take these a little out of order to get to the ones that I want to talk about first. But to me, probably the most interesting was the downside in some of these stocks that are the suppliers for Apple. And, of course, off 20% is NXPI. This one's kind of, I probably know more about this company than most of the other suppliers, just because I researched it for the Tech Insider a year ago. But very interesting to me is that these suppliers are really extremely bearish. This has basically gone down to the previous low and the candle of August 24th that had 9.1 million shares. This did it today with 29 million shares. And it's very tough for them to say anything. They've got, of course, huge contracts with Apple that say that they can't say boo. So no one saw this really coming. We talked a little bit about Monday, how I didn't think it was going to be a big deal for the Digicel German company that basically made a $3 chip for Apple. I don't think you could read a lot into it. I think you can read a lot more into NXP in that they make the chip that is called near field communications. And this was the heart of what was supposed to be in the Apple iPhone 5 and 6 that made the Apple Pay really sing. Well, we're still a year, in fact, a year and a week after Apple Pay has been released. And we're probably still under, actually, someone said it was 1%. I actually looked it up. It's like 0.5% of all world transactions now are under Apple Pay. When Apple Pay actually first came out, we talked about it on the air, and I said, you know what? How much money would have to go through Apple Pay to make the same amount of money that they made on iPhones a year ago? And at that point, it was $17 trillion would have to go through Apple Pay for them to make the same amount of money that they did on iPhones. $17 trillion. Trillion. And I said, at best, you know, they're maybe going to get $3, $4, $5 billion. They don't even have that. They've got an entirely tiny amount of it. And of course, Samsung's been pushing their new products out. We talked about that yesterday. But the heart of this is the near field communications. We talked a bit about how the problems were that everybody would have to buy a new Omron machine, that machine you swipe your card through to get the read on it. And maybe it's going to come, maybe it's not. But to get a lot of people off the shelf and moving, it was going to be a big deal. Apple instantly alienized? Yeah, I'll think of a better word in a minute. Ostracized? I think that's probably a better word. Companies like Walmart, who instantly pulled out and went back to their own pay systems that, of course, are going nowhere either. But Samsung does have that new phone, and all you have to do is wave it by even the old machines, and they work with a one-time pad. We'll talk about that when we come back. But this is all about NXPI and what the future is and what's going to happen for Apple. Can we excuse this? We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Got some other stuff going on here. Let's get to a couple of questions. Has Facebook and Amazon topped out? I suspect not, but I don't think that there's much to the upside. And this is kind of a tougher question than just this. And that is, I think a better question would be the odds of all these stocks right now going up 1% are probably pretty high. So could it go higher? The answer is yes. The question is, and it's probably an 80% chance that it goes 1 or 2% higher, or 3 or 4. The problem is that it's the 20% downside where these things gap down 25 or 30%. And that's unfortunately the way the whole market is set up. But could Facebook go higher? Yes. Is it most likely going higher? Yes. Is there a lot of money? Probably to be had. The answer is no. And I wouldn't be shorting it yet or even talking about it. You know, we've got, what's today? The 29th. We've got fund buying actually starting on tomorrow. Probably going to see a little bit of it, but then we're probably going to see a lot of fund buying the Monday and Tuesday. So the question would be, or at least this is the way I am playing it. That is, I'm going to be watching these stocks on Monday and Tuesday. They're going to have cash coming in from fund buying. And when that's over, which is going to be probably the morning of the 4th, we're going to have a good idea. Did volume come in? Did they actually sell into the strength? But I think, percent or two, can they mark it up in the next couple of days? I think the answer is easily yes. I just don't see enough money to risk walking into one of these buzz saws, and there are so many of them. There's a handful of stocks that are, to tell you the truth, this reminds me of exactly of 1999. You had Microsoft, you had a handful of other ones, Qualcomm. The money just couldn't stop in about 4 stocks. In fact, they called them the 4 horsemen. FANG is today. The 4 horsemen was 1999. And the 4 horsemen, Microsoft and Intel and what else was out there? Cisco, I almost remembered all of them, were there. And they would go up a little bit each day. Everybody had to have them. And, of course, eventually they cracked and fell apart. And, of course, the day that Microsoft's news came out, it just, it was down 20 or 30% in a day, and that was it. It's been 15 years now to get back to that, or almost 16 years. So we're kind of like that. Any of the kind of bad news could come out of anywhere, and all these stocks are priced for perfection. So I would have to know that I'm probably going to walk by a little bit of money to avoid losing a whole bunch. I'm going to sneeze. Oh, boy, I don't know if you could have seen that. I think I got the lens on that one. Anyway, that was power sneezing. This is actually not the power trading hour. It's the power sneezing hour. Anyway, as we get back to Amazon, is exactly what I'm looking at, and it's not that much different than 1999. That is, there's a handful of stocks, and that's it. And they're getting all the love, and a lot of other stocks are just getting tossed out with the bathwater and the baby, and we're going to go through some of those today. But yes, can they go higher? Are they probably going higher? Yes. Are they going a lot higher? No, I don't think so. Are they going a little higher? Yes. And watch the next few days, because they're going to be incredibly important in this market. But all the stuff I've run in the last couple of days for models says that this market is incredibly, incredibly dangerous. And even though we're going into Christmas and everything else, there is the rare event that can come at the wrong time. And again, I kind of backed away at the end of August because we were going into historically incredibly light volumes. I was afraid of being squeezed out. That same kind of bias exists all the way through Christmas now. The problem is the earnings are disastrous for so many companies, and these things are absolutely priced for perfection. We've got about one more week of earnings, and then we're going to be done with that. But, what do you think the market would do if the dollar rallied a dollar tomorrow? We were printing, let's say 99, not even 100. What would the S&P do? And that's the question. And we could easily see the dollar rally a $1.50 in a single day. Maybe it happens tomorrow. Maybe it happens next week. But certainly looks like it's loaded, primed, and ready. And, of course, why gold is off almost $30. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And got an email, got a question out here about, let's get back to it here. Thanks for your advice on Oxy last week. Thank you. Please look at AKS Steel. Want to go long? Thank you, Dave, here too. Dave R. And, you know, the big problem in one, of course, is the high volume that you had back here on the 26th and even the decent volume you had on the 27th. You've got too much volume going into the previous candles, more volume than not, which suggests you're probably going to get back and test the 205 again. If you wanted to go long, I'd have to see a test of 205 for AK Steel. And kind of quiet. Other stocks of interest, I wanted to take a look as the market's bouncing around and doing a whole lot of nothing at the moment anyway. Wanted to look at some of the other stocks that had earnings out here and make some commentaries on them. Ambrella's off at 9%. Of course, this is a bank shot on a stock that everybody knew was, at least the story on it was fraudulent. And that, of course, was the wonderful little GoPro devices out here. GoPro just kind of bouncing around, but it's down, of course. And so all that matters is GoPro's off 14%. Of course, that means Ambrella's down. They make the compression chip for all the GoPro phones. And they're never up as much as GoPro or down as much. GoPro is off 14%. I don't see anything really developing out here other than lower lows when we go to GoPro itself. Of course, the whole idea was that this stock was something else. It was not a hardware manufacturer. No. It was a content company. And of course, anytime people tell you the big lie right up front, you probably want to go running. But everybody knew this was a giant lie. The stock went up pretty much to the moon, what, 97 bucks? And at that point, it was a $17 premium to go short the stock, and people were paying it. And that's all that you need to know. They were so confident that this stock was going much lower that they paid just about anything to buy options on the downside or actually short the equity itself. My guess is that this thing is got a lot farther to drop, maybe as far as 10 bucks. They've had two things. We've talked about it last week. The first is the government. A great deal of what they were going to do was this new drone business that they were going to get into. I thought for a while the drone announcement was going to be a couple weeks ago. I actually played a Expiration Friday just on the off chance it happened on that day. They're probably going to bring it out. But of course, between now and then, the FAA said that they will license drones, which has probably been a big setback to GoPro and what they wanted to do. But I don't know if there's anything else you can say about it. This seems to me like this is going to go lower and lower. They're pulling out plans to pay people for content, kind of like YouTube, and you can use their content. It's very confusing. It's very tough. And of course, down on monstrous volume, over 35 million shares today. Not a great deal you can say about that. Cirrus Logic off about 7%. CRUS. Still in the trading range. I don't know if you can say a lot about this other than it's down, volume's picking up a little bit. Not a huge breakout here. I didn't have time to go through it, but I will tonight and take a look and see what's going on there. Automotive business looks like it's starting to pull back a little bit. DLPH, Delphi, off almost 7%. And this one, if we actually back this up a little bit, pretty much did a 78% retrace right into earnings. And guess what? It's falling apart today. I suspect this thing's probably headed back down to 66.27 on the overall market for automobiles in the coming year and months ahead. Everybody knows that I go to Buffalo Wild Wings to play trivia, mostly on Tuesdays and Thursdays. We kind of left for a while. They were redoing our Buffalo Wild Wings over the summer. I have returned to play there. If you've ever seen it, they've got these like screens where you answer trivia questions. I'm not a big sports fan, so I don't do that. But on Tuesdays and Thursdays, a lot of people get together and they have teams and they play trivia with these things. And you got a little devices. You got a multiple guess, 5 different answers. Anyway, they were basically tearing the one that I go to apart for most of the summer. So we went somewhere else. That's been put back together, and probably why I missed it. But we've talked about this forever, and that is just the incredibly huge price that they ask for what they're getting for 12 wings. I can pretty much, in a little bit of blue cheese, I can buy a nice steak dinner at Logan's Steakhouse or some other places. It's normally 12, 15 bucks. I think I'd rather have a nice steak than a bunch of chicken wings for 15 bucks. This seems ludicrously expensive. And that's with just an iced tea. I'm not a big drinker at those places either. But what we have out here, of course, is this thing blew apart, $1.48. And they continued and continually up the prices of everything. Beer, wings. And I continue to wonder how that would work out. And I think eventually they've priced themselves out of the market. Kind of tough to see. This thing really, apparently everybody knew it ahead of time. This thing broke back on September 23rd at 205 and came back down. And I didn't get it. I couldn't really see it. And I don't think a lot about shorting this into football season. I do suspect that you can see this gap filled. And maybe at that point, next March, the next big leg down and this thing comes back down. I think you set up a big trading range on this. And probably next spring, probably going to see this thing come back down much lower. They're going to get this thing back up, though, I'm pretty sure, and start distributing it. So watch probably after the end of the year. I think this thing could be another great, huge play come earnings probably next spring, maybe next early summer. Man, I don't know what's wrong with me. I guess I have the plague. Other things going on out here, F5 Networks, just general weakness in sales for technology. It's back down to its low, and that low of January 22nd, 108.60, had 9.2 million shares. This one actually has broken that low, and you only have half the volume out here today. So if I was going to be looking at stocks, this may be one of them that I may track for the next few days and see how it develops. I won't be buying anything today, but it is still interesting. We talked about LifeLock. Take a quick look at that, see if there was anything in there. Of course, they made a deal with the the U.S. Trade Commission on their ads, and earnings weren't as bad as everybody thought. I don't think anybody was paying attention. Anyway, this thing came down on huge problems with the ads. Looks like they're solved those. Earnings weren't all that bad. But as we said in the beginning of the show, the big deal, 14 days to cover. And I don't know why people would stay in a stock that had that many shorts in it, but people did. And I just wish I could have gotten some signal out here that this thing was going higher. It drifted higher. I couldn't have seen anything from the chart out here that would have made me go long this thing. I certainly wouldn't have been shorting it down here either. Nutrisystems NTRI. No Oprah to save this one. This is going back into its gap with a volume. This thing gapped up on the 1st of May this year with 2 million shares. It's already gone into it today with 1.7 million shares. I'm going to assume it's going to do 2 by the close of the day out here. And at best, you've got a trading range. At worst, this thing continues to come down. Of course, it's going to probably test that 2016 sooner rather than later now. On stocks to the upside, O'Reilly Auto Parts, ORLY, is that right? ORLY. Of course, nice pop on this one, and it just seems like there's no stopping these automotive parts places as cars get older and older and older, and people are trying to keep these things going. Hang on a second. Anyway, it's kind of different. I remember growing up, I had one of my first cars was a Challenger, and the thing was already rusting. By the time I got it, it was only 5 years old, and the quarter panels had already rusted out. Today, of course, I'm in southern climates and a little bit better. There's no salt on the roads or anything down here. But what you see is a ton of very mid-90s cars when they started to start zinking all the steel in the cars. And, you know, these things can, as long as you keep them up, the engines, for the most part, are pretty much bulletproof if you change the oil. And these cars, especially the illegal immigrants coming in, are snapping up a lot of these and working on them. In fact, I go by a AutoZone every once in a while, and there are a ton of people working on cars literally in the parking lot of this AutoZone. And it's just a lot of socially, economically depressed folks, a lot of them kind of in, every one of them with a Plymouth Voyager van. That's about the truth of it. These guys just keep putting them back together and they keep working. So as long as they continue to have a big influx of immigrants, I think we're going to sell a lot of those old Plymouth Voyager vans and other old cars, and they're going to continue putting them back together. Maybe north where they rust a lot, maybe it'll be a little less. But down here in south, seems to be a huge amount of these old cars, and they're already always working on them in front of AutoZone. But it's hard for me to see that trend changes anytime soon. I don't think these guys are going to get a loan with a $600 car payment on it anytime soon. But a nice pop on that. PayPal was off a little. It's off 2%. I'm not going to get too excited on that. Twitter, we talked about the other day. And I think we talked about it last week. Opened it low. It's kind of bouncing around out here. I haven't bought this yet and probably not going to buy it anytime soon. If I was bullish on the markets, though, I would be looking at Twitter. And we talked about it a few days ago on why, and that is I think that Periscope could be much like PayPal was for eBay. I'm starting to see, I'm a big fan of podcasts. I listen to a bunch of them. I got a great app, actually. Let me find out what it is here. Podcast Addict. If you've got a Android phone, you can download that. But it's called Podcast Addict. Anyway, I've got a whole bunch of them, and I've got about 10 different podcasts about science and technology that I download each week, and a bunch of other ones that are just entertainment. But I don't listen to radio much anymore or watch a lot of TV. And so I get a lot of the stuff that I'm interested in from the podcast. But I've seen something, the most successful podcaster out there is a company called Corolla Digital. And they're starting the whole Periscope thing for their shows this week. And I continue to think that where Twitter may kind of fade one day, Periscope may actually be one of the better technologies, especially at the very beginning for live streaming. And we'll see how far that goes. But I'm starting to think more and more that the Periscope part of Twitter may be the real long-term, like PayPal was the long-term of eBay. We'll take a look at it. Do I use Periscope? No, I do not. You know, I haven't seen a burning building or a cat in a tree to do anything. And that's normally what everybody uses Periscope for. You've got it on your phone. You probably don't use it. But you see something happens like a horrible accident or earthquake or something like that. What Periscope really does is make you a news outlet. Well, we could Periscope the show. We're already live streaming it already. The big thing for Periscope is that, of course, it works on your phone. And it's lower quality, so you're not looking for that. But it does give you the ability to always have a TV studio with you. I'll bet low quality. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what else do we have out here? What do you think of Apple now that it's had another day? And who won the debate last night? Well, I'll answer. Let's get the Apple chart up, and I'll answer who won the debate last night. And it was Fox and CNN won the debate last night. Kind of hard to see how CNBC won anything other than a lot of raspberries, but I digress. But this kind of I think I probably have to, if I ran CNBC, I think I probably would have to fire a bunch of people. Just a horrible, horrible way they handled the whole thing. But not uncommon. But that's exactly the way that a lot of people say that the press is. And, of course, they did everything to confirm all the worst ideas about the way that those folks work. Anyway, what else is out here? Apple. Anyway, we're back up on this leg. It bounced down to 107, and it went back higher out here, 120.38 for the high today. And again, I think we can really look to how the suppliers in Apple are doing, and they're telling you probably the truth. They've always fallen before Apple has, but Apple has $206 billion, and they can spend every penny of it buying back their own shares. That would be about 1/3 of the outstanding shares right now. And it doesn't take a lot to tip it one way or the other. Of course, we also need to remember that the CEO, former CFO of Apple, certainly could, well, he will. I don't think he can. He will. If he gets it and keeps the stock above a certain price for 5 years, and he's 3 years into that, he gets $500 million. Did I say that? $500 million. I don't care what it takes. This stock is going to trade over that number on the 5th year. And it is extremely like Steve Ballmer. Steve Ballmer got tossed the reins of the company, and his one job was to make sure that Microsoft stayed at a fairly decent level, and they could sell their shares into it ad nauseum for a number of years. Now, of course, all of them are out of their big positions and have only very small positions left in Microsoft, both Ballmer and not Steve Jobs, Bill. I'm having a mental breakdown here. Bill Gates. But that's it. Anyway, this is popping up. Could it go higher? It just depends on how much money they want to continue throwing at it. I think the answer truly is, though, we now have seen so many of these companies say that their earnings are going to be lower going into next year. We've also seen, of course, the amount of products that are non-iPhone get cut. And, of course, today, I think that there's a little PR from yesterday and today about the new Apple TV, but it's still missing 2 of the 3 major people that they wanted to have for streaming. And what is that? CBS, and I forget the other one now. And that continues to be a problem. So can Apple go higher? It certainly can. They can continue to buy shares back at forever. The truth of the matter probably lies in the Apple suppliers for the iPhone. And eventually, they'll probably give up buying shares of this, and it will pull back. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time. Pow. Bam. Woo.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.